Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that without both the US and China in a healthy economic state, it is hard for the world to prosper. Commodity prices measure that pullback now. As the US heads into its long Memorial Day holiday weekend, negotiators are still unable to sort out their made-up debt limit problems. Credit rating agencies are getting antsy. Still, at some point they will reach a deal. But even after they do, the costs will linger, probably with a higher risk premium for US debt, meaning higher interest rates for all. Meanwhile, US initial jobless claims were little changed from the low of 202,000 of the week before. There are now still 1.6 million people on these benefits. This data does not show the expected easing in their labour market. And the Americans released their second estimate of their first quarter 2023 economic activity, and this revised their initial estimate higher. Also improving was the Chicago Fed's National Activity Index, which reported a strong improvement, and one that wasn't expected, but it is consistent with the GDP result. Meanwhile, US corporate profits fell 6.8% to $2.3 trillion in the first quarter of 2023, the lowest since the second quarter of 2021. So that paints a picture of an American economy with economic growth but a profit recession. A strong labour market will do that. Across the Pacific, China's post-pandemic rebound seems to be running out of steam. Yes, they are reporting good year-on-year results, but that is only because of a weak base. But their recovery is patchy at best, and their currency is weakening even against a weak US dollar. They have growing labour market problems, and they're no longer the engine other countries in the region can rely on to bolster their activity. Singapore's economy shrank 0.4% in the first quarter of 2023 after virtually no growth in the prior quarter. It was a worse result than they expected. And Germany said its economy is now in recession. Global container freight rates fell a little faster last week, driven as usual by the weakness in the trade to and from China. Freight rates for bulk cargoes, which had been holding up over the past few months, fell as well. They were down 9% in the past week, a chunky decline. And the US Treasury 10-year yield starts today at 3.82% and up 9 basis points from yesterday as investors discount US government debt on the debt ceiling risks. And the price of gold will start today at $1,943 an ounce. That's down $19 from yesterday. And oil prices are also down $1.50 from yesterday at just under $72 a barrel in the US, while the international Brent price is just under $76 a barrel. And the Kiwi dollar is again softer against the US dollar from yesterday, down 0.5%, now at 60.6 US cents. Against the Aussie, we're down less than that, just on 93 Australian cents. Against the euro, we're down to 56.5 euro cents. That means our trade weight index has fallen 30 basis points to 69.6. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.